Everyone, Paul here. Today I'm going to be going over an additional indicator that you can have with, now this is with the linear strategy method. So I talk about that a lot on this channel. This is basically, you would have to have your linear strategy set up and this one as well. It helps. So the strategy I've talked about in the previous video, this is added to that strategy, and it kind of helps. But I'm not really going to go over how to set up with the other method. I'm just going to go over this new indicator, and it's quite powerful. I'm going to go over the stock market today, and we're going to see how this works, how pretty easy it is to find the moments of getting in, getting out. And we'll look at SPY and some of the others. And basically, the strategy with SPY here is you start doing it, you start coming in with your contracts, and you'll make more in gains, hopefully. And over time, you'll be able to up your contracts. And as you grow with your contracts, you can, the flow goes faster and faster if you kind of use this method. But from what I can tell with the indicator, it picks up on a lot of good signals. So I'm going to show you how to do that with the stock market doing options. Now, I am also going to be covering, I'll be talking about SPY, but you can also use this for the trading SPX and Forex. It'll work for, you could do it at the same time. So if you do SPY on Robinhood with the contracts, you can do it at the same time by trading SPX and Forex, and you can get paid twice for the same strategy. But anyway, let me show you how to set this up. Okay, so to set this up, it's real easy here. Now I'm not gonna, you have to have the linear line method, which I've gone over, which I went over this in yesterday's video, the linear linear regression candle method, and then there's the Adian oscillator method. I've talked about that as well. So I use these two. So the new strategy here is the RCI 3 lines method. This is a new strategy. So when you look for this, you're going to look for RCI 3 lines. It's by Giro. So when you load it up, it's going to look like this. 3 lines, so that you can see. There's 3 lines there, but actually, I don't use the 3 lines. What I ended up doing was I just removed the middle line, and I basically changed the colors of the other 2. So I changed it to a green, turned up opacity up, and I'll turn it into maybe like a white, a yellow, a white, one of those, turned opacity up. So basically, I want yellow, I want red. Get red there. So anyway, that's how you set it up, and basically actually did the opposite of what the other one is. But anyway, this strategy is very simple. I do everything on the hour. You usually find the best signals that way when the market is open. So what you want to look for is pretty simple. You enter when it crosses up, and you'll do a call when it crosses up, and you want to confirm everything else with the other indicators as well. You want to confirm that it's also going on with the linear line and the Adian oscillator, but I'm not going to talk about that in this video. You want to confirm that it's going up, it's crossing up from the line on the RCI 3 lines, which is 2 lines actually, but once it crosses up, that's when you enter. So you would do a call right about here. So if we saw the last time it really crossed was right about here. So if we wrote it out from here, this is pretty simple to do. So if you wrote it out from here, and I always like doing a day. I don't like doing longer, but other people might have different opinion here. I just don't like holding them longer than a day. Because when you're trading, you want to make sure that you're making profit every single day, and when you're holding on, you won't be able to trade again for the next day. So that's why I try to keep my trades on a daily basis. But anyway, if I did this on the day, this would be a $664 win. And so we just, now there are maybe a couple that won't work, but we'll just look at a couple. Basically, I'll look for when the green line goes up and the green line goes down. So even if we look on small movements like right here where you see it go down, it's still a win. Right here, if you entered exactly right here, this would still be a win. It just wouldn't be as much. So across from there to there, you still made $289 there. So then it's pretty easy to find, and you're less likely to run into problems where it goes against you. So let's just see it crosses right here. So right about here, you would enter a call, you write it. Now, as you're doing this and as you're putting in your call on Robinhood, you can also do the same for SPX on Forex. So you write it out here and you just follow the green line. As long as it stays above it, you're good. And you see when to get out because the green line goes back down to the red line. And we see, this is a 3-day move, but let's just look at a day here. This is the end of it. This looks like a weekend, but anyway, you would have had to rode this one out, but you still would be a profit. So let's look again, and you're basically riding this up and down. So you see it going down right here. Right here, it's crossing down, and you ride that out till it enters the line again, which is right about here. And you're in profit right there as well. If you follow just the line here, it doesn't really steer you in the wrong direction. If you focus on when it crosses to when it crosses again, and those are your entries, cross to cross. That's basically what you're doing. You wait for it to cross either up and down, and then you wait for it to cross again, and that is your entry point. But you can get out anytime you want. Some moves are big moves, some moves are small moves, but it doesn't seem to be wrong most of the time. Now, if you attack something like SPY where it goes up and down, up and down, up and down, you're always going to find some movements will just be bigger, some movements will be smaller. So let's move on. So right here we see that it crosses up. If we follow this, now I do it on the day just so you know, but you guys might want to do it longer. So from here to here, this was a $354 move. If you waited until it crossed again, which is right here, you're still in profit. And you're still in profit. You had to wait 2 days for this, which I wouldn't do. But 2 days worth, that's about $474 right there. For one contract, you just made $486 in 2 days. So let's just look here again. Let's remove these purple lines. Okay, so let's look at this bottom here. So it's very easy. And I want to do this a couple times with SPY, and then we'll look at a couple other stocks here too. So we see it crosses down right here, so we put a put in right here. We ride it out till it touches the line again, which is right here. It even indicates to get out right here. You get in here, you ride it out till here if you want to do longer, which is right here. This is 1 day, 5 hours. I would have got out after a day, but if you did ride this out longer, this would have been a $618 move. I'll do one more I'll do 2 more with SPY, then I'll move on to some other ones to see if they work just as well. See that it crosses right here, and it crosses back right here, so you're able to get in and out before it starts going back down. So this is a $324 move. So nothing happened here. It's not crossing during this moment, so you don't get in. You do get in right about here. It picks up on that right here. So you ride this out. This is a 3-day move. I wouldn't do that personally. It's a 4-day move. Now, it probably consolidated a bit right here, so that's why in 4 days you made $480. So, not really that big on that one. But let's just do this big one here real quick. See if it picks up on it. So, it crosses right here, so you would enter right about here for your call. And you write it out till here if you want to. I don't do longer than a day. But this is almost like a 3-day contract, and you made about $1,000. So it picked up on that, and it picked up on it before it started going in the opposite direction. So this is a very, very powerful indicator in my opinion. Okay, so let's look at some other stocks here. Look at a couple more. Let's look at NVIDIA. Let's look at NVIDIA. Now, from what I can tell, I think NVIDIA is pretty expensive from the last time I checked. But now what you can tell here is it's not crossing here. You only do it when it crosses the red line or it crosses the other line. Now, it does have that moment right here. You can't really tell, but it's crossing. So, we'll do that one right about here. So if you came in here, wrote it out till here, you're in profit because, your profit, you're able to get in and out. And you're able to get in and out before a major dip down. So let's see if it works. Right here we see a cross right here. And then if we write it up here, till about here, you're able to get out right before it starts dipping, which is pretty good. I'll look at two more with this one. Okay, so we see it crossing down right here. So you get out here, you write it down till here where you see it crossing back up. And oh my God. Oh wow, this would have been a big move. This is a $71 difference in price. I think with options, this is about a $7,000 move. If you caught that one. Let's do the last one right here because NVIDIA has been a beast lately. Let's just see if it picked up on. Let's see, crossed right here. And when did it start going back? Right about here. So yeah, it picked up on it before it started dipping down. So anyway, this works. Let's look at Apple. I'm gonna run through a couple others. I'll do 2 examples on a couple other stocks here, but let's just check this out. Okay, so this is Apple. So it crosses up right here. And you write it out. And it hasn't crossed back out yet. So you could have got out here before the market closed. Let's just do a day. A day. So this is right about here. This is $800 usually. So let's just see. Zoom in here. You see it crosses right here. This is going to be a short one. Crosses up till here. And you're able to get out before it goes down. But that's a small move right there. So these, even though they're predicting that it's actually wrong on this one. So we found one where it's wrong. See, because it's predicting up and it's not. So this might work. It works the best for like ETFs, but might be some assets out there where it won't work. So keep that in mind. This indicator is not 100%. So just keep that in mind. It can't be 100%, but it does a pretty good job. Anyway, it crosses up right here, and from here to where it crosses again, you're able to get in, get out before it goes down. So this is almost a $262 move. Let's do one more stock here. Let's do Coinbase. Okay, so if you want to do, so it crossed right here. And if you wrote it out to where it crossed again, 2 days. It's about 2 days worth. I wouldn't hold it for 2 days, but it's a $19 difference in price. So you made, this is probably a $2,000 move. And with the, the Bitcoin halving around the corner, the price of Coinbase is probably going to go up. I personally have been buying some Coinbase stock, but you see it cross down here, and it crosses up right about here, So this is a $12 difference in price. So this is about a $1,200 move. So that's Coinbase. You see it works. All right, let's do Disney. I just accidentally stumbled on Disney, but let's just look at Disney. Let's see. So we want to see where it crosses. It's not crossing on there, and I don't really count that. It's not really crossing through. It crosses through here, but does it pick up on it? Right, crosses here. It picks up on briefly. It just picks up on briefly. It's not a big move right there. Let's just see if it'll pick anything else. We got to find out it's crossing. Now here's a move right here. Crosses down right about here. And from here to here, so we got in on that with a let's see, $1 difference in price. So not a big one for Disney. So this seems to work the best for ETFs and things like that. It works the best for the ones that have patterns of going up and down, up and down. It'll work good for the ETFs. It might be a little bit harder for the other stocks. But let's just end it here with QQQ and see if it works well for QQQ, because QQQ is an ETF too. So let's just see if this works well for QQQ. Crosses right here and crosses back in right here. So this is a $4 difference in price. Almost a 5. So then it crosses down here, and it crosses back up right here. So you would have right about here. So you would have got into that one. And let's do one more. Crosses up right here. If you ride it out till it crosses again, which is right about here. This is almost a $6 difference in price in 2 days. So this works really well for the stocks that have a constant flow of up and down. So this indicator really works well for an asset that goes up and down, like ETFs, like SPY, SPX, QQQ, VOO, I think is one. But if it has a pattern going up and down, and then this is a good indicator because it can really pick up on that very well. If it's more volatile, which an asset, we did see some more volatile assets. It became a little bit harder. So I'm going to be looking at this strategy for the other assets like Bitcoin and all the others. So we're going to see how it works for that. That's in the next videos. But anyway, this is for entertainment purposes only. So if you guys want to try this out, do it for yourself. I'm not responsible for any profit or loss. But anyway, if you like this video, hit the like button, hit the subscribe button. I'll see you guys in future videos.